From the city of brotherly love, this is Shark Bite Biz with David Strausser.
Here you are. You just arrived to the newest episode of Shark Bite Biz. I'm your rockstar wannabe host, David Strausser, and this is your place to learn how to grow a business during complete global chaos. As always, this episode is brought to you by our amazing sponsor, the SAP Global Platinum Partner, Seidor. That's S-E-I-D-O-R. If your business is ready to move off of QuickBooks, automate those business processes, it's time for you to check out SAP with Seidor. Check them out, seidor.com, or just reach out to me. Now let's get back to today's episode. It's time for everybody's favorite holiday. No, silly, I'm not talking about Easter. That was yesterday, okay? I'm actually talking about tax day. We're going to talk about how to maximize that tax refund and make the most out of your money. Yes, your money, because it is your money unless you willingly give it away in your taxes. So, who do we have today? None other than Shauna, the tax goddess. Shauna A. Wickerling, CPA, MTax, CTC, CTS. Basically, we just call her the tax goddess, is a highly sought after certified public accountant and founder of Tax Goddess Business Services, PC, established in 2004. Tax Goddess is a global team of 65 plus specialists that uses plain language, not tax code, that's for the IRS, to help business owners, investors, and entrepreneurs create plans of actions to increase the business owner's bottom line, reduce costs, significantly reduce taxes, increase cash flow, and perform what-if scenario options so that owners know what decisions to make and which paths are best suited for their particular situation. So hey, without further ado, let's bring the tax goddess right on in here.
It's all about the money. The money.
Shauna, the tax goddess, welcome to Shark Bite Biz. You, my friend, you just became Shark Bait.
No, I love it.
That's great. So we have a tradition on the show. Very first question we ask every single guest, okay? What's your background? What's your experience? How did you get to do what you're doing? What do you do for a living? Basically, in a nutshell, tell us what makes Shauna, Shauna.
Ooh, okay. It's a big question. You tell me when I need to stop telling stories because I am a storyteller by nature. So
no, that's fine. I'll let you talk.
So I actually started off in all things. I started off in astrophysics. And when I was young, I thought for sure, and I wanted to work for JPL. That was my dream. That's where I wanted to be. And very long story short, my family, my mother is a general contractor, and she got a notice in the mail one day from the IRS. You know, the dark side, right? At the time, I was a freshman in college, and she got this notice, and I adore my mother, right? She's my goddess from all the perspectives. And she was so upset visibly. She was sitting at the table and so upset and kind of pushed back from the table. And just normally she's a very stoic woman. And so of course I'm looking at her going, are you okay? What's going on? No, I got this notice from the IRS and, I pay these people so much money. And I've worked with my CPA and my financial advisor and nobody can help me reduce the taxes. And it flipped a switch in my brain because good or bad as an astrophysicist, I'm all about the math, right? Give me the numbers. If anybody can figure this out and if anybody cares enough to figure it out, it's a daughter, right? So went to the business college, and very long story short, they said, oh, an astrophysicist wants to come to the business college. You should be in accounting and finance, right? So fine, start taking classes, start learning, start reading every article I can, every magazine, book, whatever it is. Get to my senior year and absolutely hated accounting and finance. Most boring thing on the face of the planet, right? Because from my perspective, all I was doing was recording history. Go back to my mom and I'm like, well, Mom, I'm trying to help you. I've got a few strategies here, but nothing big, nothing crazy. And she said, well, let's go focus on tax, because I think that's going to be much more fun. So took tax classes.
Finding the tax man.
Finding the tax man, exactly. Finally, as a senior, they let you take tax classes specifically. Right. And that's where I fell in love. Was able to combine both, helping my family and something that you actually love and are passionate about. And I think the biggest thing that really caught my attention. This is why accounting in normal terms was very boring, because that's recording history. Taxes is a giant game of chess. So you have a bunch of rules and a bunch of pieces, and depending on how you move them, in what coordination, you get to your goal, which is effectively a 0% tax rate, right? That's the goal for everyone, legally, right?
Don't do like I do and just throw numbers in the block and hope that you don't get a letter.
Right there, a little bit of a tangent. We use something called an aggression scale, okay? And it looks at every single tax strategy, exactly. We coined this term, we created this term. So 0 to 10, 0 meaning the IRS never calls you, never ever, except for a random audit, which can happen. Okay. 10 meaning we're all going to jail. Okay.
Yeah.
And what you just described is a 9, right? We call it the Al Capone, right? I'm going to do bad things or figure out numbers and hope I never get caught. Okay. So we try to drag people to an 8, which is, the highest on our level that we're willing to go. So take all the strategies, use everything you possibly can. But of course, nothing illegal, right? As a redhead, red and orange do not go well together. So I'm not going to jail. I hope you don't go to jail, right? This is our strategy. So when we first meet with a new client, we always ask them, well, where do you sit on this scale? Because if they say most entrepreneurs are 7, 8, 6, 7, 8, sometimes they'll tell me 20, and I'm like, no, come back to the good side, right? Like we're on this side, we're on the 8 side. But some people want to be a 2. They want some tax strategies, but they really don't want to ever hear from the IRS. They just, and so every person has their thing. So sorry for the mini tangent, but
no, that's great. I love living in danger, and you just confirmed it. So I'm good.
You're my 9. I love it. Most people don't even think about that as a question for their professional team. They really don't. Because they go to a CPA, they go to their financial advisor, and they say, well, I like you as a person, and I agree with your investment philosophy, or, I think that you do a good job. I've never been audited, right? Well, the problem is if you are a level 8 as an entrepreneur and your CPA is a level 2, firstly, they're not even bringing you level 4, 5, 6, 7, 8 strategies. Like they just either don't know them or they know about them, but they won't tell you, right? So they're automatically filtering things that you may want on your file. Right. So it's actually really important. It's one of the questions we tell everyone, please go ask your CPA, your bookkeeper, your financial advisor, this aggression scale question. Because if they don't line up with you, it might be time to go find someone else.
Got a lot of synergy, that story there, with something that's going on with my family. I won't throw them under the bus, but, they didn't get a letter from the IRS. They actually got it from an insurance company, I believe it was like a 1099 or something like that. And for life insurance, too, because I guess they took out money towards the policy or whatever. And or something like that. I don't know, but it was one of those. It's one of those, I think, term life policies, if I remember correctly. And that's where it makes absolute no, I don't know. It just doesn't make sense. And he's on Social Security, and he, retired, and he gets his $90K 1099 tax bill, and he's been trying to get more information from the insurance company. And he's got to file taxes. He's trying to figure it out. So now he's like, I got to do an extension. And the only path forward that he can find is he's got to sue them, because they've pretty much stonewalled all his requests as far as, how did you come up with this number? What is this number based upon? All that stuff. And obviously, if it's a 1099, it's being reported to the IRS, especially if it's $90K.
There's an option, though. Let's back up. So always, if anyone ever gets into a situation like this of any kind, make sure you keep really good records. So here is step 1, right? Here are the 15 emails. Here's who I spoke to. I left a voicemail for this person on this date, this time, right? Keep really good records of what you've done to try to obtain this information. Okay.
Yeah.
Second thing is when you go to file the tax return. So you are correct, right? If you received a 1099, copy got reported to the IRS, you're supposed to report the income. However, the IRS normally will not get into arguments about who's right, who's not, whatever, but you have reasonable doubt as to whether this number is correct, right? I mean, what it sounds like is he doesn't even know what this number ties to.
Right.
So you can, when you file the tax return, you can report the 90,000. but you can report a line right under it saying, according to my records, I never received $90,000. I'm in arguments. You can like attach a statement basically saying, I'm trying to figure out what this is. I'm reporting it, but I don't have this cash. So I don't know why I'm being taxed on it. Now, what the IRS will do, this does, of course, put like a flag, not in a bad way, but it means that typically an IRS agent will actually look at the file like a person, not a computer,
No algorithms, right?
No algorithms, not on this one. No.
Good.
So, so it gives you the ability to basically try to, I don't want to call it hedging because that's not right, but it gives him time to try to figure out what's going on. Because if he never received the $90,000 in cash, he has no idea what it ties to, right? You mentioned a loan, but if he's paying his loan, like if they're refusing to give him any information, at least he has an out with the IRS. Now, of course, if he receives the money, he needs to pay the tax on it. It's a different matter.
Right.
But there are ways that you can file the tax return and not pay the tax it's basically called reasonable doubt.
What would be better in this case then? I mean, obviously you don't know every single detail, just a high level overview, and I might not be accurate in every aspect, but say that is generally accurate. What would be better, filing for an extension and trying to figure it out, or going the reasonable doubt route with the IRS to try to get them just to be like, okay, we're not going to charge it because we can't determine.
Yeah, let me back up. So an extension is only an extension of time to file. It's not an extension of time to pay.
To give him time to figure out to get it resolved through the legal channel, right?
Absolutely.
Because otherwise, being on Social Security, I think he'd have zero tax liabilities, whereas a $90K thing, I mean, doesn't that mess up Social Security? Doesn't that
do a lot of bad things?
And that's where,
board,
that's where it needs to be rectified in one way or another.
Well, and so again, I come back to that aggression scale. I really do. Okay. Because if you want to be conservative, then you pay the tax on the $90,000, right?
Which you cannot afford. Social Security.
Yeah. You'd at least file the extension showing the tax owed on the $90,000. If you're being conservative. Okay. Maybe you can't pay it, but make sure you file that extension properly, right? The other side of it is you don't file an extension, right? But you don't report the taxable income. So the guess that you're making is, well, which way is this going to go down? Right? So this is why I'm saying it's an aggression level. Do you want to go the conservative route to make sure your extension is good and that it's approved and everything else, right? Or do you go the more aggressive route and say, no, I don't think this is real. I never received the $90,000 in cash. I have no idea what this number is, and they're stonewalling me. Right. And therefore, you don't report it with the understanding that at some point it's going to be fixed.
I mean, is there a chance that if they did what you had said as far as filing the return and then putting in that documentation so that it gets the red flag, gets an IRS agent involved, that it either gets thrown out like from the IRS perhaps, or they're going to investigate whether it's an actual tax liability or not? Will they audit the 1099?
No, the IRS does not get involved in arguments. Their job is a reporting function. So it's very similar. You have cases where somebody's in the middle of a divorce and both parents report the same child, right? On either return, right? The IRS will not get involved in the argument. They'll send a letter to both people saying, you both reported this, fix it. We don't care how you do it, but fix it, right? So either way, they're going to send it back to your family member here for him to fix it. Really what you're trying to do with the IRS is trying to prevent against penalties and interest for underpayment if it's correct.
Right.
So it's, either way, they will not get involved. Like, it's not like they're going to go after the insurance company and you did a false 1099. I mean, the IRS can barely handle the workload they have, let alone chasing down people that do something wrong.
Which is why I make up numbers for my taxes. So how can, you talked about saving money strategies, your scale of 0 to 10. I mean, when it comes down to it, how can companies really, have a strategy as far as saving money in taxes throughout the year?
Well, and it's a great way. I love the way that you phrase that because it is during the year. Right. Mm-hmm. So there's really two time periods that with relation to a single tax year. There's during the year, right? So for example, right now we're in 2023. So anything you do during the year is going to help you reduce your profit and therefore reduce your taxes, right? Now, reducing profit is always kind of a question because people are like, well, I don't want to just spend money to spend money. And I'm like, it's not what I'm talking about, right? What I'm talking about is taking profit, putting it somewhere where you get to keep it, but you get a tax deduction, right? So utilizing, we look at about 400 strategies for every single client. So depending on your business, depending on the industry, depending on whether you're married, have kids, own a house, like all of these kinds of things, we look at which strategies are going to work best for your business and for you.
I do ERP. Okay. Enterprise Resource Planning Systems with SAP, with sponsor of this episode, SAP and Sador USA. But with them, they, the end of the year is our busy season because for tax reasons, everybody wants to purchase before 12/31.
Yeah.
Because that's when they have it budgeted. They have to spend it this year, or else potentially it's not budgeted for next year because they decide, well, you didn't buy a system, we're going to allocate the money elsewhere. So the IT people or CFO or whoever may be, nope, we're buying by 12/31. We want the tax savings. And then a lot of them, what they'll do, even though I guess they're paying out for the implementation, like say they buy 12/31/23, okay? They claim the whole they claim the whole project for the contract signed, even though they're paying out payments the following year. And then they claim depreciation on the following year, even though they still don't have the system up live and running. But that's one of the strategies that our customers use a lot of times.
And there's a whole lot to unpack in what you just said, right? So depending on the company that's buying, depending on their size of revenue, gross revenue, some companies are allowed to report on cash. Some companies are allowed to report on accrual. So depending on how you report your financial statements, right? And then depreciation, there are special exclusions, special exemptions. So with most equipment, with most software, with most of whatever, you can't depreciate it until it's placed in service, right? But there are some that are exceptions that say, okay, well, if you have more than 20% of it placed in service, you can go ahead and depreciate it. So really depends on what somebody's buying, when they're buying it. I think
it's because the software is usually such a large portion of it, and the software is in service as of day one. It's usually the software cost is going to be more than 20% of the total cost of implementation. Usually it could be 30, 40, 50. I mean, we have some cases where it's 70% because they have a lot of users, but a very simple business, and it's only 50,000 to deploy the business, but it could be 130,000 in software. That's a backwards case. It does not happen very often, but it does happen every now and then. And the software, if they buy on 12/31, it is ordered on 12/31 because SAP is a public company and they need that for their fiscal year-end, quarter financial results. So it is actually ordered and in service as of 12/31.
And there you go. So that's why they're getting depreciation.
That's probably why it qualifies them. What other, tax saving strategies? Because I mean, I know everybody's filled out a job application and, they ask, are you, Native American? Are you a veteran? Are you disabled? Those types of questions. Are those types of things that actually give your business credits to actually help save you on taxes? Like, how does that work exactly?
Absolutely. Well, and those questions can apply in like 18 different ways, right? But from a tax perspective, so for example, hiring veterans in your company can actually give you certain kinds of employment credits. So dollar for dollar based on certain amount of wages, like up to certain limits that you're paying to veterans. Some companies, some companies will have more of an HR direction on things like that. We have to have a certain percentage of our workforce that is different races, this kind of thing. So, but from a pure tax perspective, normally more what we look at is the type of business. So are you manufacturing? Are you real estate investment? Are you a doctor's office? These kinds of things. And then who and what do you have on staff? So for example, you were mentioning more software versus equipment. Well, do you have more people than equipment? What kinds of things do you produce something in your business, or is it all services? So more often with tax strategies, what we're looking at is what is the gross revenue of the business? So every dollar that comes in the door, what is the net profit of the business, right? Because you've seen many companies, huge gross revenue, right? But nothing when it gets down to net profit.
Yep.
Yeah. And then really, what is the goal for the owner? So with some owners, for example, if you're 3 years out from wanting to sell your business, you may not want to reduce your profit to the bare minimum, right? Because if your profit's small, who's going to want to buy your business, right? You might want a larger profit. But if you've got another 10, 15, 20 years of running your business, you probably want the smallest net profit you can to then reduce the taxes. So a lot of when we're creating a tax strategy is more looking at who are you, the owner, and what are you trying to accomplish? You know, for some people that's, I want to retire, I want to really bulk up my retirement, or I have kids and I want to put them through college and buy their first house. I had one client, very first thing he said to me ever was, I want to buy $1 million yacht. Can you help me write it off? And I'm like, yes, I can. Okay. So really, you know, it just depends on who you are and what you're looking for. Right. And I think this is, you know, we talked about the aggression scale. I think this is one of the other key factors that a lot of CPAs miss. You know, there's a huge difference between a CPA and a tax strategist, a tax preparer and a tax strategist. If you look at Google, right, Google says there are 660,000 CPAs in the US. So I'm a CPA, right? There's only 60,000 that have a master's in taxation. So we start to specialize, right? Then there are 607 what are called CTC, so Certified Tax Coach. There are 15 CTS, Certified Tax Strategists. So out of 660,000, there's 15 people like me that do what we do, right? Wow. And all we do, hyper specialize on tax strategy.
We've had someone on the show that actually is in maybe not your category, but his is around payroll tax. And with his he's like, there's like, I think he said 20 people. But if you went to the IRS, if you had to go to federal court with the IRS over payroll tax, I am not a lawyer, but I am legally allowed to represent you as a lawyer would with payroll tax.
That's cool. Yeah. I mean, it's a perfect example of how, you know, different CPAs do different things. And I think this is one of the biggest fallacies that business owners have in their minds. You know, I've had my CPA for 20 years. They do all the strategy stuff for me. Like, I don't need a separate strategist. If your CPA has been doing it for 20 years and you're still paying more than 7% in tax, you need a strategist, right? You're missing, you know, they haven't sent you to jail. They've made sure you're legal. They've done everything properly. They've filed all your forms. That's great. But you're missing the other side of that coin. And so for a lot of people, they just don't even realize that there's a difference between a CPA and a tax strategist or a tax preparer.
That's where it drives me nuts that, you know, you'll see online places like Twitter or other places like that, where it's, oh, they don't pay enough taxes and stuff like that. And that always kind of drives me nuts because bipartisan support has pretty much put in place the laws and loopholes. And if you want to call them loopholes, I don't call them loopholes because it's not a loophole. It's the law, you know, it's how the law is written. And both sides of the aisle have kind of come up, you know, sometimes it's more on one side than the other side, but both sides have come up with the current tax code throughout different administrations and congressional sessions and all that stuff. And therefore, you know, it's not really, you know, cheating the system if you're doing things by the book to minimize how much taxes you are paying. And if you end up paying 2 or 3%, well, then you're doing
more power to you.
Yeah, more power to you. That's exactly how I view it. I mean, I don't view it as a bad thing. And if you feel that those people should be paying more, well, then it comes down to, you know, change the law, you know, change the tax code.
Well, and of course, I'm looking at it going, listen, this is one of the benefits of being an American citizen, right? Is if it's a government law, it works for them, it works for you, period. Because as you said, the law is the law, right? And I'm with you. But if you as an individual would like to pay more tax, proceed.
Most people don't know this. There's actually a form that you can fill out to pay the government extra tax. Like, here, I don't feel like I pay enough tax. So you fill out a form and you send them a check and you can pay more money in free taxes if you want to.
Most people don't intentionally choose to do that, but you're right. Some people do. And there you go. And So yes,
I wonder how many people do that. Are there any statistics out published?
I have no idea. That's a great question. I have no idea.
Yeah, I'll
tell you. I mean, I've been in practice for 25 years. I'm ex KPMG. I have never, right, ever. Yep. But on the other side of that, the people that contact someone like me and Tax Goddess and what we do are not looking to pay extra.
They're looking to pay less. Exactly. I guess let's just jump into our last topic issue is going to be business growth in the digital space. How do you think that's going in 2023? I mean, you have all the tech firms giving major layoffs, most layoffs in the tech industry ever. In history of technology, of modern technology, I guess you can say, since the digital age probably started in the 70s, I guess most people would really say, when computers kind of became a little bit more mainstream, mainframe. I mean, you can kind of go back to the 50s, I guess, or maybe even late 40s, but realistically, it was probably the modern age I view started in the 70s. And we've had the most layoffs in a long time. You have companies like Apple to Google, Alphabet, Meta, everybody laying people off, shutting down services. How's that impacting everything? And my personal take, I'll give you that first, and then I'd love to hear your response, is it gives other people an opportunity because a lot of these employees were hired pretty much competitors won't get them. And if the big tech, they're shutting down solutions or scaling back, I think it opens up the doors for competitors to come in.
And I was about to say to grow competitors. So I'm a big believer in cycles, right? And effectively, every 20 years, there's a merge and then there's a collapse, and there's a merge and there's a collapse, right?
I don't have the book with me, but have you ever read The Fourth Turning?
I have.
I am a huge believer in The Fourth Turning. And so real quick, for people that do not, we've talked about this a few times on the show, but I imagine not everybody has watched every single episode. So I will forgive you if you've missed it. Okay. The Fourth Turning is a book written by two people that coincidentally met. They were speaking at the same event. And when they were hearing each other speak, they're like, hey, my research has to do a little bit with your research. And they ended up connecting. In fact, I like it because the one guy's last name is Strauss. And, I'm Strausser. So I don't know, maybe we're related somehow, just didn't translate the name right when they came from Germany. I don't know. But anyways, what this book is it was written in the late 90s. And it was like, if our research is true, somewhere between, I think it was 2022, 2024 at the earliest through 2028, in this time period, like a cycle is pretty much a full 80 years, and they're split in 20-year segments, 20-year chunks. And they're like proof of this, and they go all the way back 80 years. And they said that now what they found was everywhere around the world has these types of cycles, but they may be at different 80-year points. They may be longer than 80 years, but every region has it. It seems like more of the Anglo-Saxon, like United States, I think they may have counted like UK or Canada, stuff like that. Those types of cultures were more on the 80-year cycle. And that's what this book was really focusing on. And it was like, and this is in the late 90s, they're like, if this is true, like something big will happen, like World War III or Civil War, something like that crazy could happen, between 2022 to 2028. Because if you look, what was it, 80 years back, I think you had World War II, and then I think they were like 80 years back, it wasn't 80 years when they wrote the book, but 80 years back would be World War II. You go 80 years back from there, you're at the Civil War. 80 years back before there, you're at the Revolutionary War. And they it's kind of crazy. It's a crazy book to read. And they're like, this is our hypothesis and only time will tell if it's actually true or not. Let's see.
Well, and I think this is where 80 years for sure, but the 20-year chunks, right, is
the
what
20-year generational chunks, I believe they're called.
In business.
Yeah.
Because, I've been through one of them. I'm not that old yet, but I've been through one of them so far. And, this is absolutely what I've seen in about 6 different industries, right? The accounting industry, the tech industry, finance industry, right? Everything, everybody merges. We create these giant Google where they do all the things or whatever, right? And then they start breaking down, they collapse, right? They start breaking down into a bunch of little tiny chunks. So your question about, well, what's going to happen to all these people laying off? Well, those people that just got laid off are effectively what I'm seeing, saying, yeah, so sure, I don't want to work for a big boy anymore. I think I'm going to go open my own shop. And they create an app. They create a new piece of technology.
That's what happened in the Great Recession that gave us all the major tech companies we have today.
Yep. And so in 20 years, they all buy each other back up again. And it's a general 20-year cycle. So I'm with you. I like your choice of the word opportunity, because that's exactly, in my opinion, what this is. A lot of people, we had COVID. A lot of people were then working from home. Big companies were trying to get people back into the office, and they're going, no, like, why? I don't have to be there.
I've been lucky. I have not worked in an office in, I don't know, 15 years.
And it's just a different world from that standpoint. Our tax goddess is now, we've got 89 people on staff in 20 different countries. It's fantastic from that standpoint, because we can hire some of the most brilliant minds from around the globe to do what we do specifically.
You can get subject matter experts from anywhere, especially because now people are used to working from home. And I think it was Soledad O'Brien on the show who was like, at that time it was mid-pandemic, and she's like, it's hard to say that anything good happened from COVID, but if you could argue that something good happened, it kind of pushed us off the digital forefront. It pushed us off the digital edge, and it made a lot of companies accept tools. Like, for example, Microsoft Teams, which was Skype for Business, Zoom, stuff like that. People started using those tools that have existed for years, and it pushed them to do things and rethink how they do things. Like, hey, we're doing this just for the sake of doing it. Why are we doing that? It made people rethink their business processes. And now a lot more are streamlined. Now, will that be good for the future? Who knows? Commercial real estate's down. That's taken a big hit, because I have customers that are like, hey, we have Regis office, because we might have one employee that is really valuable to us that cannot work from home. Plus, we do need an official business location. So they work from a Regis office, and that's it. Everybody else works from home, mobile, remote, and it's really kind of shaken up our world, but I think for the better.
I agree. Certainly there were some bad things, but there's a lot of really good things that came out too. So
the good with the bad with the good. Well, I definitely understand why they call you the tax goddess. So please do us all a favor. Tell us how people can find out more about you, your website. If you have any books or articles or anything out there, tell us how people can reach out to you.
Oh, you're a sweetheart. Thank you. Yeah, well, I'm pretty easy to find. The company, taxgoddess.com. We specialize in tax strategy, of course. So, but yeah, I've got a couple of books. I've got one out and one coming out. The Amazon. So you can always look up Tax Goddess. Super easy to find pretty much anywhere. TikTok, YouTube, the website. But yeah, if you are looking for tax strategy, if you want, actually, this is the new book. I'll give you a
sneak peek. There we go.
Not completely done yet, but the 6% Life. Exactly.
Beautiful cover.
Thank you. Our average tax rate for our clients is 6.92%. So if you're paying less or more than 6.92%, you'd like to pay less, come find us. We'd love to speak with you.
Yeah, that's awesome. Awesome. Hey, thank you so much for coming on, Shauna. This has been amazing. And I urge everybody, please check out, what was it, taxgoddess.com or the
taxgoddess.com?
Taxgoddess.com. We'll have the link in the description down below. Please make sure you check out Shauna and her company, because as you've heard, she is amazing. Thank you again, Shauna.
Thanks for having me.
Yep. Cheers. Oh, wow. That was such an incredible chat with Shauna, right? First, you all know the routine. If you found this interview helpful, if it sparked those warm and fuzzies, do me a favor, hit that like button, smash that subscribe button. But if you really want to help us out, because you know Shark Bite Biz is the greatest kept secret in the world of small business, please share us out to your friends, your family, your colleagues, whoever you want, wherever you dwell on the interwebs, whether it's Facebook, Twitter, LinkedIn, Minds, Mastodon, I don't care. Just share it out. I would love nothing more than to see Shark Bite Biz and Shauna the Tax Goddess out there trending. Now let's get back to the real rock star of this show, Shauna the Tax Goddess. I tell you what, okay? I've never had so much fun talking about such a mundane topic like taxes. Seriously, Shauna, the tax goddess, well, yeah, you definitely were a tax goddess and your expertise shined right through. The thing that stuck with me the most was your risk scale, I believe it was. It was a scale, I think it was from 0 to 10, about how much risk you're willing to take. And I think that's kind of a good thing and a good way to measure things. I mean, it's also good 0 to 100. I mean, 0 to 10, much more simplified. Now, remember, when you're willing to do risk with your taxes, okay, that does not mean that you're doing tax fraud. And obviously, I'm not a financial advisor. You all know this by now, but Shauna is. It's not tax fraud, but what you're doing is you're taking existing laws, or as some people try to call them, loopholes, but it is the law, whether it's a loophole or not, and you're just trying to push that law to the limits to see if you're able to get away with it and save money. I mean, that can be a good thing. Some people can abuse it, and it can be a bad thing, okay? Obviously, we're telling you this stuff not for you to abuse it and do it for the wrong reasons. We're trying to inform you so that you could do it for the right reasons, because it's money that you should not be paying out to the government. And again, I don't think that's a bad thing, at least me personally. While she specializes in tax for businesses, you can also easily see how a lot of this knowledge and a lot of what we talked about transfers over to regular people like me, like you, like the solopreneurs out there, self-employed people out there, you know, single member LLCs, for example. That same advice transfers right over to you. All around, though, Shauna the Tax Goddess, you gave some solid advice and some really, really awesome tips. Amazing stuff, Shauna. I really love how you help businesses and people save money. Because when they save money, guess what? We get raises. We hire more people. It's a good thing when businesses save money most of the time. I mean, obviously, you always have some bad apples in the bunch that they save money and they put it in their pocket, not, you know, charitable to the rest of the people on their team. But I don't know. I'm too happy ears with this, but I like to think people tend to do good with it. The businesses do good by reinvestment into their companies and their people to make the organization as a whole better if they save money on taxes. That's just my hot take. Please check out Shauna's website at taxgoddess.com. Question of the day: how far do you push a line with your taxes? Leave a comment down below, or if you're in Spotify, you can actually answer the question as well too, because Spotify now has video and allows us to do some Q&A. So check us out on Spotify. If you love the show, share us out. Like I said earlier, if you want to be on the show, interviews at sharkbitebiz.com. Please, if you're watching on YouTube or Spotify, you can join the channel on YouTube. It's $3 a month. Okay, on YouTube, I think it's $2 a month, and you can become a baby shark. Okay, every dollar we earn goes right back into making this show bigger, better, you know, getting the word out, better equipment, better production, all that stuff. And lastly, none of this would be possible without our amazing sponsor, Sador. If your business is on QuickBooks and you need that next step up, you need to automate things, please reach out to this SAP Platinum level partner that's around globally. Sador.com. You all know this by now, but I'll say it once again. I'm David Strausser. This is Shark Bite Biz. We'll see you all next week. Cheers.
You just experienced Shark Bite Biz with David Strausser. Please like, comment, and subscribe to the show to help us spread the word about personal, professional, and business growth. Want to be on the show? Send an email to interviews@sharkbitebiz.com. A special shout out to our sponsor, SAP Platinum Partner, Sador. Get off QuickBooks and move your business to the next level. Reach out for more info. Thanks for listening, and see you next time.